CNBC completing 26 years.
Let's just keep it that.
Parikshit is here with more on Putin's agenda for New Delhi. Parikshit.
Keep chasing the sunshine and go out and play.
Happy 26th birthday.
भी लगाएगी तू?
देखो है तो देखो.
Happy 26th birthday CNBC TV 18 from the crown.
लाइन दिखाते रहना, वो इन लोगों का बोर्ड दिखाना, ठीक है?
Listen, I wanna be there with you no matter where you go. Life is a table for two, and we're starting the show. I'm gonna spread my wings and fly so high up above the clouds.
Simple.
Well, happy 26th birthday to all of you, all our viewers, to all of us. Nigel, Reema, morning. Happy birthday.
Happy birthday, guys. And today is not just any other Monday morning, right? It's a milestone. It's 26 years of news, analysis, bull markets, recession, policy shifts. We've seen war. We've seen technology disruption. I think CNBC TV 18 has lived through it all. And thank you to all our viewers.
Well, that's right, 26 years. I'm so excited. Goosebumps, guys. 26 years. I've been happy to be part of the family since CNBC TV 18 went into double digits. Been here for 15 years. Thank you to all the viewers, and since the morning, whether it was the dress dada or the makeup person or our PCR team who's talking to us in the year, well, whoever you asked, they said, we have been here 15, 20, 22, 23 years. So we have evolved as a channel, and we thank all of you all out there. What a journey. I love you, CNBC TV 18.
That's nice. And I guess one of the reasons why this place is special is because the teams are almost, it's unbroken from so many people here, as you said, 10 years, 15 years, 20 years.
I've been here longer than both of you.
Put together?
Without sounding old and giving away my age, but I've been here longer.
Just to carry that forward.
Quick game. How old were you? 20? No, okay, I should ask you that.
We've come here as spinsters, bachelors, got married, had our kids, seen each other evolve over here. CNBC TV 18, what a special place. Glad to be part of you, and let's go from strength to strength. And thank you all our viewers, because without you all, we wouldn't be here.
Indeed, thank you for watching, thank you for believing, and thank you for making CNBC TV 18 your window into the markets for 26 whole years.
Oh, absolutely. And I think, why not rewind the clock back a little bit, right? And just look at the journey that we have traveled together. And that's what we're going to do here. 26 years ago, CNBC TV 18 went live. And India's markets were a completely different universe. Even as we sort of complain about how this year has been a tough year, why not take you back 26 years to tell you the shape, size, structure, and of course the returns that we've seen together during this incredible period. Let's take a look at the massive reset which is played out. And let's start by looking at the size of the market itself. From under 5 lakh crores, which was the total market capitalization of the NSE when CNBC TV 18 started, to now over 470 lakh crores in market cap. It's been an incredible 100-bagger in 26 years. Just look at that. 4.9, not even 5 actually, from 4.9 to 472 lakh crores now. So that just tells you, I think so many things go into that 100-bagger, the making of the 100-bagger, right? But let's look at some of the numbers. The number of companies listed has also grown nearly 5 times in this period. Look at the growth that's a number, 648 companies in 1999, 2,883 companies as we speak at this point in time. Trading activity, right? This is cash market daily trading activity. Used to be 1,650 crores 26 years back. We are over 1 lakh crores in daily average turnover as we stand. Well, perhaps the biggest structural change, the financialization of India. If you look at mutual funds share in household savings, and I sort of went back and looked at data from when it was available, it was 0.9% in 2011-12. I couldn't get data all the way back in 99. It stands at about 6% plus in 2000 as we wrap up 2025 today. And of course, I mean, you know, as many, and we also believe that this journey is just about starting. From barely 20 lakh demat accounts in 1999 to more than 14 crore demat accounts today. And these are unique accounts, investor accounts that I'm talking about. The journey's been incredible. From almost no SIP culture, systematic investment plans, that's basically become the bedrock, the foundation for the money which is coming into this market, to now basically every month crossing 20,000 plus crores. This is a market no longer owned just by institutions or only by institutions. It's a market largely owned by India's households. Let's go back to the Nifty 50 itself, right? I mean, the OG, as the youngsters would call it, before the Y2K hit. 50 names that told the story of old India. You can see it. Do you recognize some of the names? There's Ranbaxy there, there's MTNL there, so many PSUs. OBC, Oriental Bank of Commerce, as you can see, was part of the Nifty. IDBI Bank was part of the Nifty 50. EIH Limited. I mean, the composition has changed. That's what the Nifty looked like 26 years back. Now, of course, it's different, right? There are, by the way, only 17 of the 99 Nifty 50 constituents which survive today in the Nifty. On your screen now, the survivors, the 17 of the original, which are now part of the Nifty as well, as we look at it at this point in time. Now, let's just take a look at the, the size of the average company in India, listed company in India. Look at large cap, mid cap, small cap. What I've done is I've taken the current definitions of what is a large cap, what is a mid cap and small cap for comparison's sake, like comparison's sake. So top 100 is large cap, next 150 is mid, that is mid cap, and everything, after that, which is 251st onwards is small cap. Let's take a look at this. In 1999, the top 100 companies made up 87% of the total NSE. It's 60% right now, right? That's one. The largest stock back then in 99 used to be HUL with a market cap of 50,000 crores. The largest company is Reliance with a market cap, not current, but at the end of November, is Reliance Industries, 19.5 lakh crores. So basically, what I've done is I've taken average market cap for 3 months, back in 99 and for 2025 as well. And that's Reliance at 19.5 lakh crores. Now, mid-caps make 20% of the NSE now, while back in 99, that is 26 years back, they were just 9%. The largest mid-cap used to be Gujarat Gas with just an 800 crore market cap. Think about it. Largest mid-cap, 800 crore market cap. The largest mid-cap today is 125 times that, DRL, with 1 lakh crore in terms of market capitalization. Small caps now make up 20% of NSE today. Guess what they were? 4% back then. The largest small cap was a company called Foseco India with a market cap of 150 crores. We are talking about tens of thousands of crores for small caps now. ACC with 35,000 crores in market cap today is the largest small cap in that sense. I'm just going by SEBI definition as it stands right now. Well, markets ultimately follow earnings, and India Inc's earnings story tells you why this bull market is legs. And I think the numbers will come up. And I've just looked at phases, right? Between F5 of 2005 and 2010, EPS grew at a CAGR of 11%. Then came pretty much like a lost decade, which is F510 to F515. There was just 3% recovery, followed at 6% between F520 and between F515 and F520. And then, of course, we've seen this COVID and post-COVID breakout. EPS has grown at a CAGR of 20%, nearly 20% between F520 and F525. This is the strongest earnings acceleration in 2 decades. I will end with an asset class return table. Over long-term, equities have delivered. The Nifty is compounded at over 12% for 26 years now. That is the CAGR. It's beaten gold. It's beaten, of course, fixed income as well, basically beating every other traditional asset class That has been the compounding story as far as equities is concerned. So that's a 26-year journey. Just a brief look back at, and there are so many ways to do this, but I just looked at a few matrices which tells us the story about what has happened over the last 26 years now, and what an incredible journey it has been. Well, Nigel has walked across to the, okay, I think, Rima, next 26, you want to take a shot?
But it's absolutely incredible, right? Markets were so much smaller. Information didn't move as fast, much slower.
Yeah.
And India's investing culture still hadn't taken shape. But that's been the journey over the last 26 years. And CNBC has helped shape so many of those conversations which made those decisions. But a quick check on Asia before we get to Nigel. Asia is a mixed picture this morning. You've got the Hang Seng, which is down about 0.5%. Nikkei is flat. We had the July to September the GDP print, and that disappointed for Japan, coming in at a contraction of minus 2.3%, worse than what the street was anticipating. But on the flip side, Taiwan is holding up 0.6% higher, and Kospi, which has had a banner year with a 70% up move, continues to chug along higher. GIFT Nifty, on the other hand, is pretty much flat. But Nigel, what are you looking at?
Well, over the longer term period, if you look at the last 26 years, on an average, you get returns of close to 11 after around 12% on the Nifty, which isn't bad. And hopefully the next 26, we can move maybe to mid double digits as well. So that's just about history. What happened in Friday's trading session? Well, you had the institution numbers that were positive. Yet again, the FIs were mild sellers, not too much though on that front. The FI data actually in the futures market is encouraging, because if you look at the stock futures, they added more longs than shorts. And even on index futures, well, they added more longs than shorts. Remember, this market is still net short, with more than 80% of the positioning on the short side on index futures. So you have shorts in the system, and now the data points that are coming in there, both on the futures data, as well as if you look at the option side, they bought more calls than puts, and they wrote more puts than calls. So that's giving you a sense that maybe, in fact, in the near term, even the FIs don't expect the markets to see a big correction from here on. Quickly moving to the options data, then you had a couple of strikes that were very, very active. The 26,400 call, good amount of open risk build up. That appeared there was some out of the money call buying out here. So, someone taking a bit of a pound, if you get that trade deal, or if the markets want to take off from here on, then you'll make some money on that front. And the 26,000 put, from the start of the week has been seeing a lot of writing. At the start of last week, the premium was close to around 100 rupees. That's come down to around 20 rupees, which is telling you that 25,900, 26,000 markets extremely important on the downside, while the recent high at around this 26,326, that becomes a near-term resistance. The Nifty Bank, that's the one that's been leading the way. And now you have the 20 DMA, that's at around that 59,000 odd mark, so close to around 750 points away from current levels. A couple of stocks that we'll be tracking in today's trading session itself. You have Keynes Technology. I recall in the final hour of trade on Friday, I said there's a possibility that this one goes into the F&O ban. Well, that's precisely what's happened. It's moved into the F&O ban. Massive selling that we saw. Remember, they have a con call, so we'll keep an eye out on this one, whether or not the management can come out with some clarification. And a couple of other names that have newly listed. The lock-in period does open up close to 2% of the total shares that are outstanding. They are eligible to be traded. So Pine Labs as well as Lenskart, because of the unlocking of that cool-off period, shares will be freely tradable. So I'll keep an eye out on both these two.
Indeed, for Pine Labs, about 500 crore is available. The lock-in ends. And for Lenskart, about 1,700 crore. But it's going to be such a busy IPO week. We've got a rush of IPOs, 5 of them. One of them is Wakefit. They're looking to raise about 1,288 crore. Corona Remedies, Nephro Healthcare, Park MediWorld. And the big one will be ICICI Pru, which is looking to raise about 10,000 crore rupees plus. IPO opens on Friday. But lots to track, plenty of action with the Fed, the INR, what's happening with single stock actions like Biocon and Interglobe Aviation. So